Hello everyone. Um, you welcome back to my channel, Easy Peasy Forex. If you have not subscribed, I enjoy you to subscribe to this YouTube channel. Turn on notifications so that you can always see whenever I post a new video. So last week I was unable to post anything because of the national election that's going on in Nigeria, and so everybody was quite busy with the election. Just the Saturday was the election. People went out to vote, and I have times for the video most of the time on weekends. So that's why I was unable to upload anything last week. So, but previously, my last video was on analysis on GBP USD, and I'll talk about getting 185 pips. That week, we were unable to get 185 pips, but we got more than 120 pips. Yeah. If you follow the analysis, you will see it's true. So we'll make analysis again for this week. Last week, I traded GBP USD. It's one of my favorite pair. So, but this week, not that I won't trade it, but there are things I'm looking for. You remember this chart? This is the dollar index. Okay, this is the dollar index. I'm expecting bullishness on dollar index. Bullishness there means I'm expecting dollar to be strong. I'm expecting the dollar to be strong. I'm expecting it to rally. Okay. So, but last week was quite a consolidation. This is the price action last week. The last candle here is Friday. The ones that follow Thursday, Wednesday, Tuesday, Monday. So you see that last week was more of we can say a consolidation, but the movement is not that great. Are we together? The movement is not that great. So that's the kind of price action we have. So in this scenario, for instance, the question will be up or down. That's the question we have to answer. Is the market going up now or it's going down? And I'm talking specifically about the dollar index because the dollar index will influence currencies. Take for instance Euro USD, GBP USD, AUD USD, New Zealand USD, USD CHF. And if the dollar is strong, GBP USD will sell, Euro USD will sell, gold will sell. Do you understand? So, and because it is the dollar that is the underlying currency, underlying assets for those currency, you must always check the dollar index if you don't want to mess things up. Okay. So what I marked this place, this portion I marked there, that's buy side liquidity. So let me see. Okay, that's buy side liquidity anyway. I have some EU with writing on my trading view. Okay, that's buy side liquidity. So I'm expecting the market to tag in there. Okay, so it's just a question of where will the market go, up or down now from this place. Though overall I'm bullish on the dollar index overall. Okay, so if let's check the 4-hour time frame. The 4-hour, you can see it's obvious consolidation. If the market wants to retrace, you know we have areas where we could say the market could retrace to, but If the market is coming here before thinking of going back up, that will mean that you know it will mean a whole lot. I can begin to equate it with trend reversals and stuffs like that. Okay, if we have that, all right. So I'm not really expecting it to come really down here before we see uh the bullishness, but it can happen. It might happen because if you look at the current price action now, it we can say that this is a buy side liquidity being taken, right? We can say this is a buy side liquidity being taken, so we can expect the market to aim for lows. Okay, we can expect the market to aim for lows with what it's doing currently. So they are basically holding the dollar index in consolidation. It's intentional. And one of the reasons I believe is because of what will happen next week. Let me show you the calendar next week. On Monday, only the Swiss National Bank will be having a report release, that's CPI month over month. On Tuesday, the Australian dollar, the Aussie, that's 4:30 a.m. will not trade in that time. So then Federal Share Powell will testify by 4 p.m. So on Tuesday, we expect volatility around that 4 p.m. Then 2:15 on Tuesday, ADP non-farm payroll. Then Federal Powell. These are high impact news that will move the market. Then Friday, 2:30 is the NFP, the non-farm payroll, average hourly earning, unemployment rate, alongside with that of um the Canadian bank. And this is the time where so many people will cry. By that 2:30 to 2:40, many accounts will be blown. Yeah, it's normal. That's because people never learn. People never learn. So when you advise them to avoid the non-farm payroll, they will think that maybe you don't want them to make money or so it's very unpredictable. I believe the news is just designed to just wreak some havoc. That's my opinion. It doesn't have to count with you. So we can see both. That's the thing. Now we can see buy side, we can see sell side, because it's currently being held in the consolidation. And then whenever market allow me delete this, and whenever market is in consolidation, it means that there's liquidity up and there's liquidity down. Do you understand? So at the top of this consolidation there will be liquidity. Okay. Below the consolidation also there will be liquidity. Okay. So the market might decide to clear the liquidity on either side before going where it wants to go. So I can only predict that. Okay. So, but which market will I be interested in this week? This new week we want to enter, the week of the NFP. I would actually be interested in gold. Okay. This is gold. Let me return to the daily time frame, or let's start from the weekly time frame. What am I expecting from gold? I'm expecting bearishness. I'm expecting the market to go bearish. Okay. If you look at this market now, you will obviously see a fair value gap here. That's a pretty nice fair value gap. And observe that the market took liquidity before it created the gap. Okay. The market took liquidity before it created a gap. So if I'm expecting the gold market to go bearish, I'll be expecting it to return from that uh fair value gap, to return from the inside of that fair value gap. That's where I'll be expecting the bearishness from. That's where I'll be expecting the market to sell from. So if I drop to the daily time frame, this is what it looks like. So yeah, this is what it looks like. Okay, so the market, it's like aiming high. All right, let's see, maybe it will be more clearer on the 4 hour time frame. Okay, so on the 4 hour time frame, what do we have? We have sell side liquidity here, sell side liquidity there. Okay, so market structure shifts here. Market structure shifts there. Okay, so the market had momentum and just decide to work with this fair value gap. Okay, just decided to work with that fair value gap. Market just tap into it. It's not coming, it didn't come to this other block, tap into it, then it finds rejection. Okay, that's like balancing, like a little bit of the range there. You like, yes, a little bit of that range. So it balanced it a little, then it rallied higher. Okay, so when it rallied up to a point, does not take this high yet, so created something close to it, then it corrected, and as it corrected again, it went higher. Okay, this candle, this candle here returns into the 50% of the move up here. This is what I mean. If you look at it on, let's say I put a Fibonacci here. Okay, if you observe the low where I mark here, it falls inside the fair value gap there. Maybe I'll show you later. You see, that's it returned into the 50%. This is 50% of this range. So it returned to the equilibrium price of the range, and the market rallied up. Okay, so these are things for me that confirms this market is going up into that fair value gap. Those are things that confirms for me. This was the low I was talking about. So these things, it's not just that we're just doing something. We know what we're doing, we know what we're looking for, we know what the market is looking for. Okay, we know what the market is looking for. So you see, it entered into that place, then rally. So I picked my new range now from this low. Okay, then to this high before we saw the retracement. It made this high before we saw the retracement, the high of that black candle before we saw the retracement. So the retracement with this candle now was exactly at the 50% of that range. Okay, so that equilibrium price proves to me that okay, this thing wants to go up more, and where are we expecting it to go to? We're expecting it to get here before we sell. So now it's creating a new price range. It's creating a new price range. If I drop to 1 hour, for example, if I drop to 1 hour, so uh the price leg that I marked the other time will be clearer now on the 1 hour, right? Be clearer on the 1 hour, but that's not what I'm interested in now. So on the 1 hour, we can see also this is relatively equal lows. Okay. Oh, that's too far from this low. Okay. That's a liquidity. See how the market took that liquidity. Okay. Then also there is a fair value gap. There is a fair value gap here. The market filled the fair value gap and found rejection at the high of this candle. Okay, so I'm saying that this institutional order flow for now is supporting bearishness. Okay, so let me delete this. So what I'm going to do now is I'm going to pick my range from this low now. I'll reference this low. I'll reference this low, then I'll reference this high as my 1 hour range now. That'll be around the New York session on Friday. That's my 1 hour range now. Okay. One has to be careful with gold because of the way it moves. So the question will be, where would I expect the market to retrace to before we see a rally into that 1890 to 1910? Okay, where would I expect it to retrace to? Okay, if I look for the 50% of that range, for example, we can have that the 50% of the range as supporting, we can have it supporting price to go up. Yeah, 50% of the range is clearly here. That's 50%. Let me change the color. Okay, I've done what I want to do with the Fibonacci. Let me delete it. If you observe closely, what are you going to see around that 50% of the range? You can obviously see the black candle, which we expect to support price, but also pay attention to this. Pay attention to this. Yeah. Then at the high of the candle, what do we have there? We have this. So just at the high of the candle is not exactly the 50% of this price range, okay, but it's very close to it. Okay, so I am of the opinion that market must come here before it goes up. Now it might not do that because of um in forex market we'll deal with probability. It's a market of probability. But if I see the market opens on Monday and it retraces down into this place, I will look for a buy. Now I will do another video perhaps tomorrow on lower time frame and confirmation, lower time frame entry and confirmation. Okay, some people don't know how to do it. Doesn't mean that immediately it enters into that gap you should just buy. No, there are things you look for, there are signatures you look for. Okay, so I'm already seeing that in price. So what I will be expecting basically is a rally from that fair value gap on the 1 hour to 1890. Okay, oh, I don't mean to use this. From here, let me see here to 1890. Okay, that's from 1849, let's say 1850. 1850 to 1890, that's 400 pips. Okay, that's 400 pips. I'm expecting a 400 pips movement on gold next week. Okay, that's what I'm expecting. So I don't know the plan. It might just come. I mean, the market might just open on Monday and keeps going higher, and it doesn't give an entry. But I wish and I hope it will give entry. And if it doesn't give an entry, there's no problem. We'll wait for it in that weekly fair value gap. Let me return it to the weekly. Yes, we'll wait for it. If it doesn't return to where I marked, okay, we'll wait for it here. We'll wait for it here, then from here we send it to hell. Yeah. If it doesn't return, if the market opens and it's just going up, 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 we'll wait for it there, then from there send it to hell. But that is not what I'm expecting. I don't believe the market will just open and will just keep going up. I believe the market will come to this 1 hour fair value gap, and which also flushes with the equilibrium price of the New York range on Friday. That's what I believe is high probability scenario. That's what I believe it's gonna happen. Okay, so prepare your mind. And one of the things that you must do, like I said, is that we must always watch DXY. Okay, the dollar index, we must watch it. So what am I expecting on the dollar index according to this chart? According to this chart, what I'm expecting on the dollar index is when the market opens on the dollar index, the market should rally up a little bit. Okay, so while it's rallying up, this one will come down into this fair value gap. Then the market will drop from that rally it's going to make on the dollar index. So basically, very simple and straightforward. I'm expecting this market now to drop inside this fair value gap. Then we from 1850 we send it to 1890. That's the plan. So like I said, I'll do some videos later tomorrow after church service. I'll do a video on lower time frame confirmation entry so that you can know how to deal with gold. So, and because we are trading gold, it has a lot of movements and it can it can go against you, and if you are not careful with it, you can end up losing a whole lot of money. So you must calculate and you must manage your risk well. If on a norm you use 20 pips stop loss on GBP USD and you use 0.1 at your lot size, I will always advise you on gold you use 0.05. You reduce your lot size by 2. Because if you risk too much, okay, it will affect your emotions and you're going to trade wrongly, you're going to trade badly, which is not good for you, it's not good for your trading system and anything. So hopefully this pans out on Monday. Till then, I wish you all the best. Then expect my next video tomorrow. So if you have not subscribed, please subscribe, turn on notification. It has content that will bless you, and always share with your colleagues, everybody you know that is trading the forex market. Kindly share with them. Bye bye.